Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I was looking over there for my volume profile. I couldn't find it. I found it just in time. So, I am super tired today. Or whatever. I just did not sleep very well last night because of my gut. Anyways, yeah, I'm here. I'm here. The other thing is I started this stream and then I didn't click the intro thing. Oh my gosh. So yeah, I'm already super off. Let's go to the charts. All right, so here's the treasuries. There's a slow upward drift in these things, man. I mean, when you come back and you look at it like that. I mean, remember here when it was the 11th. That was a crazy up move, and then they dashed it, right? And it was like, oh, maybe treasuries aren't going to do so well, and then just slowly but surely. Oh, it's almost like they're going to cut interest rates or something. Huh. Well, oops. Here's the S&P 500. Actually, not going anywhere the past day or even overnight. Huh. Well, that's interesting. Oil, maybe the bleeding is over in oil. A little bit of an up move here. Okay, now, okay, I guess the real big story yesterday, though, was gold, wasn't it? This was like the largest single day decline in gold since like 2014 or something. So that's a pretty major collapse. And one of the key headlines that was driving this was reports that like the squeeze on silver supplies, like actual delivery of silver, is kind of abating. Is that the best word to use? I don't know. It's kind of clearing out. So they sold gold hard, and I think there was a good amount of retail. Like here, when we were talking here, it was like, yeah, I don't know if there's retail really in this, but I think that there was in this. So I think a lot of people got killed on that thing. That doesn't mean that gold can't continue to come up and maybe reach a new high, but it's definitely like a possible top. It's definitely a possible top, so we'll be careful with that. I think I'm gonna keep my silver for now, though. Kappa, it's just kind of doing its own thing over here. And the Japanese yen. Okay, well, the Japanese yen maybe has stabilized. They're going a little bit flat. But the dollar continues to rally. So that's curious. And we got Bitcoin here. They kind of tried to make something happen yesterday, but they got cut down. That's actually a really big jump to like get cut back like that. Okay. Well, let's come back over here. So I'm trying to do this stuff with our projected ranges. So let's come over here and see if it works correctly. So we want to come over to the futures prices here. I'm gonna come into ZN 10-year note December. Look at the options quotes. Applied volatility is 5.08. I do kind of wonder, like, does it, like yesterday it was 0.02, does 0.02 and 0.08 make a difference? I think it might, actually. All right, so I got a chart here. And I got to pull over, where did I put it? This right here. So this is the 22nd. and it is 0.08. Then where is my output? My output window, when I refresh this, it should tell me. Oh, actually, I don't have that on, so it's not going to tell me what it's doing. So I will just come in and change that to the debug mode. That way, when it goes through, it should tell me, okay, yes, yesterday it used 5.02 and today it used 5.08. But it looks like that did not change, because I did have it at 30 and 31 before. The upside targets, at least. Yeah, we tried to do our options math. So I figured out, I think one of the things that was confusing me yesterday, the calculation that I did, like with the calculator, was actually correct. The problem was you have to divide it by 2. Because if you think about it, right, you've got like, here's the current price, and then there's going to be this probability of distributions, right? Right? And what we're saying is the implied volatility is this. So if we're trying to find the upside target is going to be the implied volatility divided by 2. And that's why all of the targets seemed like they were way too far away. And then when I came into my indicator, the indicator had factored that in. So that's why it worked. Now, that said, I don't know if I'm getting the same numbers as Uzi. So we can double check. He'll send us, I'm sure he'll just send us a picture or something. Yeah. But one thing that I got going here is that it will give you the prices in terms of the treasuries. That helps. All I use it for is to do the decimal conversion. Well, there you go. Yeah, that part is a frustrating part of it. But did this, because we had this impulse move up, and I'm not sure what that was all about. But we came short of it this time. So this actually, yeah, where do we have? Well, so the upside levels that I have, the first set of levels is 30 and 31. And then on the downside, I have 19 and 18. You have 29.5 and 30. No, you have 18 and 19 is correct. So is that perhaps just rounding? Yeah. That's interesting. Would just be so I tried to do a calculation yesterday that was basically like what is one tick in terms of volatility? And it came out that like it was like a really, really small number. In other words, like it would have, like, I think the volatility has to change by like 0.1% to make a meaningful difference. I don't know. It was, I didn't understand. No. You're right. In decimal, 0.015265 is a tick. But I mean, if the expected range for the day was 1 tick, what would the volatility be? So it's basically like we'll use T for tick equals volatility times the current price divided by 2. Oh, times divided by the factor. I think it is, right? So then you get 2t equals VP over F. So it's 2TF divided by the current price. So it's like 2 times 0.015625 times 16 divided by 114 is 0.004. Into a percentage. So it's like 0.4% change in volatility would be a tick. Yeah, I think that's what that means. Times 0.01 to make it a percent. Oh, not times 0.01, times 100. Anyways, 0.4%. So I think that like let's just round it to a half. I think that 0.5% in volatility will change those by 1 tick, which means that if our number over here, if the change is less than 0.5, then it has a negligible impact on our results, I think. Yeah, with an indicator, I don't have to do the convert exactly. Yeah, that kind of makes that part easier. Now, I also think that I can, because I think part of the problem is remembering to come in and look at it every day. This is the sort of thing that I forget, right? So I do think because it's in there so nicely that we can like just web scrape it. It's a little bit difficult because there's not, like, when you inspect it here, right? Like the div doesn't have an ID or anything. That really irritates me. So it would have to be like, it's probably something like, you know, the first div, you go 6 divs in, and then the 4th div, or, you know, it's going to have to be based on the number of divs. And if they change the format of the page, then then we'd have to change our script. But I think we can web scrape it. But again, the thing that I'm noticing here is, probably most of the time, the difference is not a difference of 0.5. So that's kind of curious. But anyways, now that we've done that and we feel that number is correct, the thing that I'm noticing here that I think is kind of curious about it is that number one, we came up short of the target, just barely. We barely came up short of the target. But then also, we're like right back to the open right now. So most of the time when we've been doing this, I found it weird that when I come into this session, we're already like right at that number. That seemed to me like doesn't completely make sense, you know? Like, not that it doesn't completely make sense, but like it just doesn't seem like that should be what happens most of the time. And maybe it was just like during that period that we were looking at it. But like the play that we had been making was coming in, seeing it at that place and fading it. If it's in the middle, what do we do? I'm not entirely sure what I'd want to do about that. I do see that the market order imbalance is very much short. So how about let's take a short right here on in sim. Oh my gosh, it moved down just as I was about to click it. Well, that sucks. I'll hit the I'll hit the low. I'll hit the low. Okay. Either nothing or take more risk. Yeah. I mean, it seems like it's maybe a slightly riskier play, but you know, the downside is just so. Whew. But I do kind of think there might be something more to that. Actually, we should come double check over here. Just make sure that there was not a headline that I missed. The gold chart looked like a meme stock breaking, says Goldman. Yeah, it does. But that also makes me think that there could be other legs to that. Slovak Prime Minister claims the EU tried to sabotage canceled Trump-Putin peace summit in Budapest. Yeah, that wouldn't surprise me. Japan's new Prime Minister took over yesterday, really? I didn't see anything about that. So other thing that's going on, I'm kind of thinking I should shift strategies here in terms of the systematic trading that we do on here, at least. Let's hear. What's your question here, C Trader? I don't know if you know anything about this, but do you know what is the best book on systematic trading in your opinion? Oh man, I used to know this. I used to have a book. I think that there's a book that is just straight up called like systematic trading or something like that. That is good, but I hadn't read that. I don't know. It kind of depends on what your existing technical skill level is, right? So the book's by Andreas Klenau, where he basically shows you how to write the Python and everything like that. If you don't have any existing technical ability, that's a really, really good one. But if you already know that kind of stuff, it's kind of like, there's nothing in here for me. Like it's too hard to sort through all of the teaching you the basics of Python to get into the like, okay, but what is the actual quant thing in going here, you know? So the first book of his is I don't know, just look it up by the author. Just look it up by the author. I can't remember anymore. But he's got two. He's got one that's like trend following, and then he's got one that's kind of more general quant stuff. Oh man, I've got like something poking me. In the back of my shirt. I don't know what it is. Something's like. Anyways, I was gonna say, there's this trading server host that wanted to give us a VPS, because they're doing a sell and for Halloween, and they're gonna give us an affiliate link and everything, so you get a discount, and then we can make affiliate sales off of it. And you know, I'm really particular about sponsorships. You know, no, I don't do indicators just because those are competitors. And I don't do chat rooms. I don't do affiliate links for chat rooms or crypto. Those three. But, you know, like especially futures trading platforms, news squawks, tools that will help you. You know, we're all over that. And I suppose that, you know, like a virtual private server fits in that, so we can do that. But I also feel like that if we're gonna do that, that maybe we could have more content about actually doing that and using it ourselves. So they gave me a server. And so I'm thinking about how to deal with it. I don't think that I can do much of my automated setups kind of stuff with it. I will just have to like jump on the box and install things. But then when I start to think about doing that, I'm like, well, wait a second, because I'll have to install NinjaTrader. What license do I use? Okay, well, I suppose I can, for NinjaTrader, I can use my developer license for that. But then I have to have data, and I won't be able to get the data over there and over here. So I might be able to just do a demo if I'm only doing it for like 2 weeks. But does that really make sense? Plus, I don't know if, my email might be blacklisted for the, I mean, it was 7 years ago, but I don't know if that's changed, but, or maybe the right way to do this is to just open a small prop firm account. Well, if we did it in a small prop firm account, that means that the algorithm wouldn't be able to trade treasuries. Is basically what I was getting at there. So I'm thinking, for the treasuries themselves, we can focus on, our discretionary trading and getting a better feel for these, for the volatility levels affect things. And on the automated trading side, I should be focused more on equity indexes, maybe? Well, let's see here. So I do have this over here, yes. I don't know. Seems like okay. Well, that's interesting that we never came below. Now, I don't know if this is actually the right one. Let's just let that run for a little while. 10.8K. Well, it looks like they filled me there, so that's good. Think that there probably will be a little bit more resistance to it at like the 22-ish level and the 21-ish level. I also think we should, well, should I take 20 or 19.5? I think it should be, no, it should be, so it's between 18 and 19. So should it be 19.5 or 19? Let's leave it at 19. I think that if it is 19.5, that we should get a little bit of warning, a little bit of opportunity to see that that's what's going on. So it's probably, but whereas at 19, you want the spot in the line. There is a lot more at 19 than there is anywhere else. It's not like a huge amount, but there's about 400 contracts more. So, ZN at the weekly VWAP too, yeah. I remember the desk traders saying that there's epic battles at the VWAP, that they had traders that specifically were there to get involved and do things at the VWAP. But what they would do, I don't know. Yeah, it could do weird things there, that's for sure. U.S.-India trade deal likely soon could be announced at Asian Summit. Citadel's macro guru fears opaque interconnectedness in private credit. Riots erupt at Irish migrant hotel after 10-year-old allegedly sexually assaulted. Wow. If Xian reaches 19, we should get taps on 2s and 5s. Well, so far, I think I made the right call. Right? I don't know if I can really take too much from that or if that's just luck. But it kind of feels like I just made the call like, well, they didn't. Actually, you know what was going through my head was there was an impulse up and it looked like a relatively strong impulse, and it wasn't even enough to tag the 29. It wasn't enough to tag the upside volatility target. So that to me was like a sign that the upside move was weak. And then the cumulative delta change on the way back was strong. And so that's why I decided to go with the momentum on the downside. So that's like so the reason why I'm a little bit like, no, I could just be lucky is because it is almost purely technical, right? I don't know of anything, like I'm not sure. I'm still looking. Well, what time did that happen? 5:20? Like 2 hours ago? I don't know, man. Just didn't see anything like in the news squawks or anywhere really that has me like, yeah, okay, it's that. You know? It's good for managing. Well, it definitely gives you a better idea of like how far it can actually go, right? Because I can imagine, I bet you that there's probably plenty of times where, you know, like the trade that always would seem to screw me up would be we would get up to like the top of the range, like the session high, and I see some absorption on the bid, and I want to see it bust up, you know, and turn into like a strong trend, and then like that ends up being a 50-50. Because I can remember there was a period, like 2018, 2019-ish, where I was like trying that a lot, and it kept blowing up in my face. And probably if we looked at the volatility, or probably we're looking like right at the projected range for the volatility. And so maybe you did have some people buying there, but all of the option market makers were fading it. Exactly. Knowing that there helps manage risk, there's no guarantee at each price level, no more than any random number. Yeah. But it does kind of have it like, well, okay, but expecting to get 8 ticks is a lot more reasonable if we're coming across the open. Because the other thing that we've gotten from this, at least during the time period that we've been watching, is that a move from one side of the projected range to the other side of the projected range is not that uncommon. I kind of would think that it would be relatively rare, but I think it's turning out to be, at least in this low volatility regime, it actually happens a lot. now that you have it on the match, do it on all 4 treasuries and watch. Yeah. Well, so first thing is you have to go and grab it for each one of them. That was another thing, is that like if ZN is at 5, ZB is at like 10, right? And ZF is like 2.5. So that's interesting. Yeah, we should add that. Well, I can add it to these charts over here. In fact, well, I don't know. I think I'm going to wait until I have the web scraping before I put it on all of my charts. So like the bigger thing I'm still thinking about is like, what should we do to try and run on a VPS server? We don't have to run on a VPS server, but it just seems like a good opportunity to make a video, especially if there's some technical setup sort of stuff that I can add. The issue is there's not like automated NinjaTrader. Like, okay, is there a command that I can type that will install NinjaTrader and start NinjaTrader and start this particular strategy and things like that? I don't think that there is. I have to set NinjaTrader up on there and then just let it go, I suppose. And maybe I need to build some things into the strategy to report back to me so that I can see what it's doing without having to open the VPS server up. That could be. Although there's not really any issue with me just having a window over here that is the VPS server. Okay, so that makes sense. So then on the volatility bit, does this work as well with the S&P 500 and the NASDAQ? It's kind of what I'm getting at there. Give it a whack, yeah. Another idea that I have though is I actually, so what do you think about this? I actually think that the best technical opportunity that you might have to pass a combine at least is something where you watch all of the instruments. That you want to get the diversity of having all of the instruments. You know what I mean? So I'm trying to sort out in my head what that might look like. I know, like, probably the most successful trading that I ever did was early on when I still worked at the bank and I was first looking into futures. So this was like 2010, and it was like every day, because it was like the easy money, quantitative easing 2 era. There would just be like a small impulse in one particular commodity, and then it would trend all day. And it was like a different one each day, but you know, I would just come in and I would look at all of the different instruments and see which one it was and then go long that. And it would work for a long time. It was like way too easy. It's way too easy. I don't think that it would work, you know, that well. Something quite that easy. But perhaps we could do something that is like, okay, if we're getting a decent amount of trend in cumulative delta and autocorrelation with price, and we're within the right area of the range within the expected volatility, then we take a trade on that instrument. And it's based, you know, we're watching all of the ones that broker, whatever, that prop firm, that funded trader program allows. What do you think? You guys have any ideas or things that you would like to see with that? It's the other thing. I don't know. I guess I'm getting a little bit more serious about like everything up until now has been primarily like, well, yeah, there's this, that, and the other. But really, what I care about the most is improving my trading in treasuries. I feel like that this is something that will keep me occupied for a while. So I can kind of focus on that in treasuries and don't necessarily need to spend my time like trying to apply some random forest to the order flow in ZN to pull something out of that. I should instead be doing those sorts of things on like equity indexes. Or in a like a short-term momentum portfolio type of strategy. No, I really like the short-term momentum portfolio strategy. What do you guys think? Where's my yeah. There, can close some of these tabs, can't I? Yeah. Close that one. I'll leave that one open. Let's see here. Oh, this isn't the one that I want, actually. Well, I suppose we can do this. Well, you know what? That I feel like that on the downside move that we had there. Well, so first of all, that reversed back to my entry point very quickly, didn't it? I think I'm gonna stick with the short because if we're gonna say like we're gonna take a position at the open and hold it to the projected range or one tick within the projected range, I think I'm still betting on the short side here. I think unless something comes in here and the S&P 500 starts falling apart, so we got to keep an eye on that. We're going to do the day trading momentum portfolio. I think that we also have to keep track of the correlations. Not even the correlation. It can't even be the correlations. It's got to be like, I don't know how to put it. You know, when this is moving up, this is moving up. When this turns around, this turns around. So that I don't take a position in both of those. Only in one of them. But at the same time, I could also say, okay, ooh, actually, I really like this. If this is I'm kind of getting this, and the cumulative delta and the price are all aligned, all look okay. And then this one is also going up, but they're supposed to be anti-correlated, then no trade. Because something weird is going on here. Or maybe I'm take the trade in if I have like a bunch of like 3 things that are all supposed to be correlated, and these 2 are going in the correlation that they're supposed to, but this third one is like the odd man out, then maybe I would take the trade in the one that's the odd man out because it's being driven by something different. Assuming that one is showing like strong auto-correlated volume. Look for a certain amount of delta for the first 15 minutes. Ugh. Well, okay, so the problem with that one would be that number would be different for every instrument. We would have to figure that out, right? I don't know if I would have the data, at least not right now. So the other thing is we got to do something like that we can like run for the next week or something like that. It's kind of what I'm looking for. Yeah, with the treasuries, we could definitely do it. The treasuries, we could definitely do that. Although I don't know. Well, they've come back down a tick here, by the way. So, well, I definitely do want to do more with the VPS testing. I do think that I'm going to focus on the eGUI front end today first. Because, you know, I like one of the ways that I justified to myself being like, well, we're gonna dive back into the abyss with this. I'm not gonna take the poor deal that they're giving me, was because it would give me more time to focus on these sorts of things. And now all of the sudden I'm like being ADHD about it. When I have a day, there's so many different things that I want to do and I don't know which one to focus on. Right? I should do the eGUI first. And then if I feel like I've accomplished my goals for that before lunch, then I can mess with the VPS this afternoon. Especially since the VPS is probably going to require like setting up a platform. I suppose that at the very least I can like get in there, set up NinjaTrader, add my license, add my indicators, and get that all up and going. And then look at what they've got. If they've got any kind of APIs or things like that that help assist in the setup of that. Or images. It's gonna be it can't be a container. It's gonna have to be virtualized. So if there's any kind of automation involved, it's gonna be Docker. But there's probably not any kind of automation that we can really do. Unless they're like operating system level things, maybe. Caroline Levitt told the Huffington Post when asked why the next meeting with Putin will be held in Budapest. Who chose the location? And Caroline Levitt replied, "Your mom did." These people. They're just shitposting, man. You know, it was something, I know that this is like a crazy segue into like something like dive into politics completely different from what we were talking about. But something that I saw yesterday that I thought was really interesting. I think it started with, I don't know if you've seen the ABGGGG club. But basically, there's this conservative creator on TikTok that's been making fun of Antifa and the arguments that Antifa use by claiming that he started his own club called the Anti-Bad Guys, Good Guys Club. And basically, like, if you're against the Anti-Bad Guy, Good Guy Club, then you must be a bad guy, right? And he then started, you know, at first it just started like parodying like what Antifa tends to say, but instead of talking about fascism, he just used good guys, bad guys, right? But then he started like using the arguments like, okay, well, here are some of the things that the bad guys do. And he was like describing Democrats. It was really funny. So it started with that. And then I saw this post that was from Ben Shapiro from way back when Obama was president. That was going through like, here are the key features of fascism. You know what I'm talking about? And he was showing how they applied to the Obama administration. Long before Trump was ever a thing and before the left ever got in on this, you know, the right is fascist sort of kick. And I felt like it applied really, really well. So that was kind of a weird thing to watch, because like I always thought of it as like, oh, that's just only the left does that. No, the left does it too. Man, I really thought maybe we were going to turn back down, but they're just settling at 22.5 now. It's because I took a trade there, right? You saw that I took a trade there. Now they're going to want to make it so that it just kind of oscillates back and forth there the whole time. This is definitely, well, So maybe the answer here is we should be expecting low volatility today. Like, we don't really have anything going on. Let me double check that. Oh, we have a 20-year bond today. Well, that's something. Trump meeting with NATO secretary. And don't we have, is it tomorrow? No, let me look it up. Yes. Oh, okay. So they're going to do delayed CPI on Friday. So we were likely to see maybe some constrained volatility until Friday. But there's also a lot of earnings still going on. So ooh, you know what? If we're doing this, if we're going to do this like momentum strategy and multiple instruments sort of strategy, shouldn't we also be taking into consideration significant gamma levels? Well, I have that for the S&P 500. But can I get that for the other ones? Financial futures. I go to indices. Oh, see, gamma doesn't show up over here anymore. When I come, oh, because this gamma exposure one is in stocks. So does that mean that I can go into it? Like, what's a big, like, Apple? Does that mean I can come into Apple and see gamma exposure? Ah, okay. Okay. But not for futures. So to really do that, we would need we would probably need to do like a service. Probably need to use a service to factor that in. CME Group doing the November trading challenge. Okay. Hmm. Sometimes I forget when I'm reading Zero Hedge that it is very much a right-wing political website. When I first heard of that website, I didn't know that that's what it was. I always kind of associated it with left-wingers, in fact. But and maybe back then it was kind of left-wing. But like after the 2008 crisis. But and they spend a lot of time trying to get people upset about various cultural issues. I think you need a few more DOMs on the screen. Yeah. Well, maybe a few more DOMs that are actually doing something. Oh, by the way, we never rolled over our oil. Let's fix that. Let's see here. It should be CLV now, right? Or no, CL. Is it CLZ? Yeah, it's CLZ. Yeah. See, this 2-year and 30-year, they haven't had any activity at all. So they've never centered. I can't even see. I mean, there are probably bids and offers out there, but I can't even see where they are. Pivotal research on creatine finds foundational applications way beyond the gym, including brain, bone, and healthy aging. Yeah, well, I could have told you about that. Do you mainly trade F? Do you mean futures? Yes. Well, primarily interest rates. ZN. The hedge is a special flavor. Yeah, it is. It's not like it's, well, let's say it's populist. I think it's populist more than anything, right? Like, the reason that they're giving out all of that information is because they want people to, they view it as a way to fight the power structures that be, right? To give people the opportunity to actually stand a chance in the market, which I do like that about them, right? Like the frustration is, if I want to get like analyst reports and good reporting about what's going on Wall Street and what people are saying, I have not seen anywhere that provides the kind of reporting that Zero Hedge does. Not anywhere even close. I also kind of wonder like how Zero Hedge gets away with it, because to some extent, aren't they like publishing information that's only supposed to be going to subscribers of those big analysts, right? But they've like never been sued over it or anything. Like the left wing version of Zero Hedge is deal breaker, right? Isn't they're not necessarily explicitly left wing, but it's probably the best counter. But if you go to deal breaker, like it's a completely different kind of website. Crony capitalism. See, it's a little bit. Right-wing zealots at Sinclair and Nexstar push their luck, refuse to put Jimmy Kimmel back on the air. Well, I don't care, but you know, what's some information that's going to help me predict future order flows, particularly in fixed income? Oh yeah, when you said FI, you meant fixed income. I should have guessed that, huh? Hey, Big Toasty, how have you been? I haven't seen you in a while. Like I'm already back to 925. Wait, is this website defunct? Maybe this website isn't updated anymore. Well, if I click on this story, I'm not getting a date. But their opening bell thing is not, was from September. So maybe it's been down for a month. That's crazy. Let's ask ChatGPT. Yeah. Zero Hedge talks about seeking alpha and FT Alphaville. Well, FT Alphaville would actually probably be a good one, but you have to pay for that. The zero hedge premium service. So they have like 2 levels of premium, I think. Is it there's like premium and pro? So premium, the one that's like $20 a month, totally worth it. Totally worth it. The stories that you get that have the premium tag on them are exactly what you want to be able to read. Is like here's one, just their pinned story right now. What on earth happened to gold today? A few shocking charts from Goldman's commodity desk, right? Okay. So what are the Goldman people saying? That's exactly the kind of stuff that you want to read. And preferably, I don't know if it's going to be the case in this one, but they're going to give you charts that show you, like, kind of help you see the flows themselves, like how much money or volume was coming into a thing, how are like momentum traders positions, things like that, right? Now the pro subscription, that one's like $100, and I don't have that one, so I don't know if what you get in pro beyond that is worth the $100, but it's definitely along the lines of the kind of stuff that I would like to see. And again, I've never found another website that comes even remotely close to sharing that kind of analysis. So I really find it a little bit suspicious that, like, we just range where I took my trade. You know what I mean? Because when we were going through, there was nothing that special about that price. It just kind of sliced through. And then it reversed very quickly back to there. It just seems really weird. Do you find any value in reading news? Oh yeah, absolutely. Absolutely. Because ultimately comes back to this thing. I don't know why I keep coming back to this one, but if we were to look at things from a perspective of time frame versus edge, we'll call it alpha, right? There's some alpha on really, really short time frames, and then all of a sudden we get to this spot where it's like, for most intraday time frames, there's no edge at all, right? And these time frames, we're basically not able to trade on because you have to be a robot to trade on these. And these time frames, we're not really able to trade on these ones because you need a lot of money to trade on these ones. And so we're stuck in this zone. And this is where it seems like that there's negative alpha. That the market is intentionally designed to just be really random on an intraday basis, because if it wasn't, then people that have the money or have the information wouldn't be able to transact. It wouldn't be able to use the market for the primary use case of the market. So what that means is if you're going to trade in this area, well, there's all sorts of technical things, I suppose, that you can pull out. You can just be, trying to get lucky, I guess you could say. But I'd say, since this area is for the people with the money or with the information, and if we're not the ones with the money, then that means that we need to be the ones with the information, right? So what I'm doing is I'm reading as much news as I can, particularly about like analyst opinions on macro conditions and flow analysis, especially the things from like Charlie McElligott from Nomura and the flow traders at Goldman, and like these charts that kind of show you how the momentum traders are probably positioned and things like that, right? I'm combining all that together with what financial reports or economic reports are that day, other events that we're seeing that day, right? To make a prediction. Well, and then seasonality is another major factor. And I'm combining all of those things to try and build a bias for the day to see, okay, there's one group of people that are buying because it's the end of the month. And there's one group of people that are selling because of this macro condition. And can I kind of sort out all of those, the combination of all of those things together? Is there a major imbalance? And if I see that there is a major imbalance, then that's when I want to take a trade, right? And then I'm using what I see on the order flow to help confirm. If I'm seeing an imbalance short, right, and then I'm seeing a really, really strong cumulative delta down, trending down, strong correlation between cumulative delta and price, I can take that trade earlier than I otherwise would be able to, because I only need the teeny tiniest little bit of information to confirm that what I was expecting to see happen is actually happening. And that's how I take the trades, right? So yeah, I think that for us day traders, that like news articles and that sort of thing is the most valuable information that you can have. And that 99% of the things that retail traders tend to look at on a chart are completely useless. Do you believe that's fractal scales to every time frame more specific? No, it's so the fractal nature of markets is really interesting because it is a fractal function. There is a part of the market that is a fractal function, right? Because what a fractal function really is if I have a function f of n equals, this function, right? Then the f of n1 or n2, let's say this is n1. The f of n2 is you're passing the result of n1 into n2, right? That's what makes it fractal. And there's no way to know, like, what is the f of 100? We haven't found some way to do the math and just directly compute what f100 will be. I have to compute f1 through 99 first. And that's what makes fractals really interesting, because it seems like there's a pattern and that there should be a way to calculate it directly, but we can't figure it out, right? Now, with fractals, there's also the self-similarity, right? As you zoom in on a fractal, you will see the same kind of patterns over and over again. But there's also there's certain patterns that they're similar, but they're slightly different. There's also patterns that are just you'll only see that there, and it doesn't look like that anywhere else. And it's just, the whole thing is bizarre because it's just infinite complexity as you go further down, right? So the issue with the fractal is, if I know the original state of the fractal, it's difficult to predict how it's going to play out, even if I know the initial state and everything. And so it's the same with markets. So there's some things about the fractal nature of markets that I think can kind of help you. Like, you can use some of that math and so forth to see things like, how trendy is it right now? But the idea that markets behave the same at all time frames is objectively false. In particular, assets tend to trend over very, very long time frames, but the same cannot be said on intraday time frames. You can make money, like a momentum strategy, you can set things up where you can get a risk reward of 100 to 1, where if you win, you're going to make 100 times what you tend to lose on average. But you can't do that on an intraday basis. It can't move that far. The limits of liquidity prevent it from moving that far on an intraday basis. On an intraday basis, you're going to be lucky if you can get 5 to 10 times your money. Right? So there are absolutely, and then there's also a lot of stylized behaviors that happen because of the structure of the session. Like you're going to see more volume and price movement at the start of the session and the end of the session. So I can look at an intraday chart and differentiate it from a daily chart by looking for those things. So even though there might be some similarity, right, there's like a limit to that sort of a thing, right? But I still, going back to the thing that started this, you know, I still say, if you're going to stand a chance on an intraday basis, this doesn't mean that there aren't some technical things that help you, because I do think that learning about order flow can really help you substantially. But I think that the primary source of the edge, like the thing that is absolutely necessary, is you have to be informed. And I don't really think that you stand a chance long-term intraday trading without being informed. Yeah, refreshing discussion content than the typical. Well, thank you so much. I appreciate it. Yeah, because I get so frustrated by the other content out there, you know? Like the thing that frustrates me is everything out there that people are teaching about financial markets from day trading influencers is complete trash. And then we come in here and we're talking about the news, macroeconomics, things that we can actually prove, and market microstructure, like proven stylized behaviors of markets and especially of order flow. And it's just objectively better content, and yet I find it's very difficult to catch people's attention. But I guess that's just the way it is. Part of the issue lately is that I lost my day job about a year ago. Took me 7 months to find a contract job. The contract job went for 6 months, and they kind of, you know, set things up like that they would hire me at the end of it. But basically it was all so that I don't think that this was in their intention, but the way that it feels is this was all just to get you invested so that they could lowball you. So I'm really frustrated by that. And I really, there's lots of things that I want to do. Like I want to make my own trading platform. Making your own trading platform is hard. That's, you know, a multi-person job and something that you really would need a lot of money, you know, a couple $1 million to do effectively. I think that we could make a really great business out of it, but that takes a lot of investment. And unfortunately, because of the way that things are, I really wish that one of the things that frustrates me, and if you are young, it's, and I think maybe everybody experiences this to some extent, but some get lucky and some don't, is like when you're young, you have the ability to take on risk because you don't have a whole lot to lose. But you also don't have very good ideas most of the time. Like you don't really have the good, like I had a lot of ideas when I was a kid, but I just didn't, so some of them were just dead bad. And some of them I couldn't execute on it, you know? Like I wasn't fast enough. I didn't see the key insight that ended up being other people that really became big from it did, right? And now that I'm older, I often find that I'm on the forefront of things like that, and I'm not able to take advantage of it because I'm just not able to take on the risk because I've got a family to take care of, you know? And so there's supposed to be, well, not that there's supposed to be, but it seems to me from what I've read about startups that there is a point at which you become old and stable enough that then your ability to take on risk increases again. And that some of the most successful founders tend to be older because of that. Right? But I'm not sure that that's going to happen for me, because I had kids when I was basically 35, and one of them is autistic, so we're always going to have to take care of him. So, well, it's been better. It's been a week basically. It's Wednesday, so I've been a week since the contract job ended. But you know, like Thursday, Friday of last week, I was watching the kids, and then I was watching the kids on Monday, and then on Tuesday I had an interview and spent all the time studying for that. Which I don't know if any of the studying that I did helped with that interview. I was studying a lot of like really, like I've been memorizing things that are on the technologies that are becoming popular, but I don't have as much direct experience with, like Kubernetes in particular. So I've been memorizing terms and things like that for Kubernetes. But they didn't ask me any questions like that. They just asked me about my experience and asked me to walk through different things that I had done, which for me is the best kind of interview. I love that, right? So anyways, today ends up being the first day where I feel like I can work on my trading platform. And I'm already like, I'm already being ADHD about it. I'm already like, well, but we'd also like to do this, and there's other things that come up to distract you from it. Yeah, almost to the target. Well, we did come back down. We didn't make a new low, but we came back down. This one, I think that this move down, I would consider a wash, because there wasn't any strong volume or changing cumulative delta in any of the treasuries. You were AFK doing plumbing. I kind of assumed that you had already gone to do your cleanup again. Oh, you passed for the plumbing inspection. Because that would have really, really sucked. All that work and they didn't pass. Oh man. So something on TikTok that like I love, but like I think it does bad things to me, and so like I avoid watching it, is like there are guys that are like home inspectors, and they will show all of the problems that they find in homes as a home inspector, and it makes me so anxious, man. I can't handle it. Sci-fi home. I think there's more than one of them, but yeah. Oh man. Every once in a while it'll TikTok will show me one. And I saw this one where there was like a really thick beam, you know, so it needed to be a thick beam because that's like going to be supporting a lot of weight and everything. And I think that it was the homeowners that had done it, but basically like all of the other studs had been taken out. And so the whole house was being supported by like one stud. Oh man, that one was like, oh, because that's like your whole house is gonna collapse, right? Ugh. Oh no. It's kind of a weird thing. This is a medication thing, right? Like, when I'm not on the medication, I'm like one of the least anxious person you'll ever meet. I don't get anxiety. But when I'm on the medication, I do. But these days, it's like when I get that, I immediately recognize what it is. And so I just avoid anything that makes my brain go into that mode. So, but it's kind of weird to me to like have to manage those sorts of things. And maybe it's something about getting older too. Like, I remember there was a period, I think it's while we've been doing the stream, because I remember playing Apex Legends a lot when that first came out. And I remember there was this one week where it was like, I didn't like the way that the game was at the time, and they had made a new update that I felt like made things a lot better. And so I had a weekend where I could just play, you know, and so I had myself set up to just try and play that as much as I could that weekend. And I couldn't handle it. It was like, when you're getting down to the wire and you're, because I was getting to the end game where you're like one of the last 5 a lot, and it was just too stressful, man. It was so stressful, and I was finding that like I was spending all of my chemical energy on the game that I was then deficient when I was trading, because I didn't have the you know, like there's things where like your focus and stuff is limited, and so I couldn't play hardcore games as much. And I think that that's a combination of being on medication and getting old and needing to eat better quality stuff, you know. Anyways, but it maybe this is a video that I need to make, because I think that having to deal with that is like kind of giving me a leg up too. It's like, I know what you've got to do physically to really perform at your best. And I find that a lot of beginning traders, for some reason, are really terrible at these things, right? Like especially these kids that are like 19 and they're getting into trading. They want to stay up all night and trade like other time frames, and like the Asian markets and the London markets and things like this. So they're staying up all night. They're spending like they just become super hyper focused on the markets. They're eating shit, like they're just eating ramen noodles and these sorts of things. And like, you have to have balance, because the most important thing is being able to perform. And if you're never in if you're never healthy enough to perform your best, then you're not going to be able to compete. So you know what? I'm just realizing, and I don't know why I didn't realize this sooner, is that we are below 4%. New build, super low quality. Well, yeah, that's why I think it bothers me, because I still want to buy and build another house. Nobody else wants to do it. I don't think that it will happen. None of the older kids want to move. Melissa hates moving. But I feel that as we get older and we get a better idea of what Ashard's needs are, that it will make sense for us to move. So gonna want a house that's better set up for that, like something where like having cameras in there so that I can keep an eye on him a little bit more easily, like having those factored in from the beginning would help. Having a kitchen where I can completely lock the kitchen, or, you know, somebody, whoever's cooking dinner, can be in the kitchen and not be bothered, would probably be really helpful. like things like that. And I also kind of expect that that the older kids will probably want to live at home for a long time. Like probably at least until their mid-20s. So having a house that would be able to accommodate that as well. And having a place that is closer to the tech jobs, because I'm like 20 minutes north of Salt Lake City, and most of the tech jobs end up being 20 minutes south of Salt Lake City. So it's like a really long drive for me. So it would be better to go and get a nice house in like Alpine. And it would need to be like custom built so that, you know, there could be locks that are easy for us to open, but that the autistic child can't. You know, those sorts of things. So it'd have to be a custom built house. But then the issue is custom built houses are just not as high of a quality as they used to be. They're just not. The wood itself isn't as quality of wood because there's these, you know, they're like new growth trees that are growing faster every year, and so that it's not as sturdy of a wood. And they cut corners everywhere, and yeah, like new houses are just not as high of quality. Certainly, if I tell you what, if I was a home builder, I would probably be like the slowest, most unprofitable home builder ever. Because like the way that I've was taught and trained to work with wood is like to do things with the utmost craftsmanship and quality and try and get everything perfect. And yeah, you know, places where like the micro millimeter differences in your tools matter and stuff like that. That's not going to make you very fast at like framing houses, right? Wow. They haven't touched my target. I guess we get another hour, right? I feel like that the S&P 500 in particular just seems really quite terrible. It's terrible to write. It's just like very range bound. Like there's nothing happening. Yeah, if the 2 and the 5 hold, it's going to come back on me. Well, I think that the 30-year wants to touch 119 even at least. So they're actually on that trade right there where they traded 49.74 to touch 20 again. That was the largest impulse that we've had in the last hour. So it's going to happen. That might give us a better chance of it happening now. It's like there is some activity coming in. I would think that we would want it to happen before 8:30 because 8:30 is when the mean reversion period kicks in. And that was a good time to come back and check if there's any new stories. Apple slashes iPhone ear output boosts production of base Pro iPhone 17 models, Nikkei reports. And there's a good amount, there's a reasonably large iceberg at 20.5 as well. So I'm just now noting there should be people up and getting ready, and they're not. So I'm going to go and chase them. Okay. Now, I think we can just leave it. It'll be okay. Well, doesn't look like I missed. Well, no, I did. I missed 7K iceberg at 20 half. Ugh. I always hate these. Isn't that's a little disconcerting? Don't you think? I don't know. Well, I think it suggests to me. By the way, Andrew Miguel, good morning. It's a new name. Welcome. Here's Amir. Welcome. This suggests to me that there is another leg of this big sell-off that we've had. But the problem is especially when you get a tick up like what we just had right there, right? 12. So it took 12K to clear it. There was a good stack on the bid after it ticked up. Yeah. That's often how those end, right? Yeah. It's often how that ends. So we'll see. Like maybe the market makers pull at 20 half and we tick back and forth across there, and then they see if they can touch that 19. But that's making me a little bit nervous. I think that it might be too late. Like that, maybe I should have hit into that iceberg. I have some comments about oil. U.S. Energy Secretary, right? Oil prices are low. It's yes. Well, they're refilling the SPR. I'm not sure if that's why oil recovered yesterday, because I was hearing about them refilling the SPR like before it bounced, but because the whole thing, like, at what prices did Biden sell the SPR at? I can't even remember anymore. It'd be a perfect reversal if it happens. 2's off the 2's, 5 off this. Yeah. Interesting. Well, I'm not quite sure what to do about this because I really don't want to hit into 21, but I kind of feel like that's my best option at this point. There's also, looks like there could be an iceberg at 20 half. You know, something that I remember seeing a lot was like if you saw a big iceberg on the offer, that you would then see a big ice when it cleared it, you'd see a big iceberg on the bid too. Almost as if it was the same person doing, you know, oh, I'm going to take a bunch short here. And then when it goes through, hear me, I'm going to take a bunch. And I don't know why they would do that, but it just would happen a lot. I usually think of setups like this as having a little more confirmation because there's two of them. Well, and the concern to me is still that I'm not actually seeing the other leg come through. Like, well, I think that the iceberg was helpful, but if we're really going to get our target, we really need to see those market sell orders come through, you know? They are dancing a little. So like the size difference between the bid and the offer is really close. They're both staying above 2,500, which is a little curious. For a while there, they had it, you know, like they were coaxing people to buy and nobody was buying. Okay, so they do sell it down. Well, that's interesting. Because there was a bit of an iceberg there at 20 half, but they were able to sell it down. So, well, so first thing is that could become a liquidity hole, right? I'm getting signs there now. Well, like 1600 is like okay-ish, but especially if we tick up and they're not willing to put a lot on the bid, that's like a big warning flag that we're getting a liquidity hole there. But maybe we're lucky and there is a little bit more of an impulse and they catch it before that. Like it could be often what happens is there's an impulse and then they'll come back to the liquidity hole. 30K across 4 prices for no reason. Yeah, it is. I find that amount of volume trading here in this situation a little odd, for sure. The problem is just that volume on its own is not really tell me that it's going to come down and touch this, right? But it does also make me, also kind of says there's something else going on. Well, you know what? We really should be watching the ZB because there is a 20-year auction today, right? And while there was big trades going on over here, I didn't really see anything all that interesting in ZB. If it was a 10-year auction today, then that action that we just saw there would have been like, oh yeah, that's a rate lock. I suppose it could still be a rate lock with, you know, just because it's a 20-year auction doesn't mean that you would only be hedging in the 20-year, but okay, so uptick, but 2,500 on the bid. So not the sign of a liquidity hole. Like there's an issue with the offers putting up liquidity there, but not with the bids putting liquidity there. Still, we've been here now for like what? Wow, almost 20 minutes. I'm trying to keep an eye on the 30-year here a little better. Wow. Here's an interesting story. I don't know if some of you will understand this, but if you work in tech, I'm about to leave my job due to long stand-ups. I've been with my company 2 years. When I started, our stand-ups were at 9:20 and they went on for an hour. That's a long stand-up for something that's supposed to be like 5 to 10 minutes. This was on our first week, and I just kind of put it down to me being new and spreading information. We are a 4-person team. Oh man, I've known stand-ups that had like 12 people that were shorter than that. By the way, once you get beyond like 5 to 7 people, like that's too many for stand-up. Like if you're in a stand-up with 12 people, like you should be afraid somebody's gonna get let go. However, I quickly realized that this was a norm. They were 9:20, around 10:30 every day. I spoke with the manager and he was determined to keeping it at 1 hour. Wait, he wants it to be an hour? Are you gonna tick down here again? Now you're getting the low liquidity on the bid too. Later on, I spoke to our CEO. He had a word with our manager. The meetings went from 9:30 to 10:30. I complained again to my manager and to my CEO and nothing. Now our stand-ups are consistently around 10 a.m. and last till 11 a.m. For the 9 to 10 a.m., I find it very hard to get any work done because the stand-up isn't officially at 10. It's at any point from 9:30 onwards, so I'm easily disrupted. I have days where the stand-up goes on till around 11:45, only to go for lunch at 12, not getting to work until 1. Well, this is common. I find that a lot of work happens between 1 and 5, but the job besides this is great, but I honestly feel beaten down by these. Well, if the job otherwise is great, then I would just put up with it, to be honest with you, because you don't want to be out in this market. Oh, wow. They cleared the 20, huh? Fingers crossed. I'm curious how a stand-up of a 4-person team can be an hour. Me too. Hey, Asher. Asher, you need to go eat. Asher, go eat breakfast. Something like that. So part of me is like, you know, part of it is practicing holding it until I have to go. I'm definitely getting that. Like, look, it took the 20, but now they're back to 20.5, and there's low resting liquidity at 20.5 for sure. So what I'm getting supports price just continuing to be stuck at 20.5, and not that we're going to get another 2 ticks down and get my order filled. But I think we're still just going to hold out. Play computer games during this. Your manager is terrible if the manager is intentionally having hour-long stand-ups. That's crazy. See, I think part of this was like, okay, like pull the 20 and see if anybody pukes at 19.5. Well, there was a few. But like, I don't know if there's enough of like any kind of like trap traders or anything like that to get us away from here. Okay, that uptick was really bad. No, nope, you have to go eat. Go eat. No, go eat. Okay. Well, that makes me feel a little bit better. Whoa, actually, I'm a little bit weirded out by this action here, man. Because so when it ticked back down, I thought, oh, okay, yeah, no, the hole is still at 20.5. But then I looked at the number, and they actually traded 4,000 contracts short to clear it. What? I'd still say put it on 19.5. Yeah. Well, I think the chances that I get 19 before we in the next 30 minutes are a little low, don't you think? So, like part of this is that we are trying to do something a little bit different, right? Because normally I would just see the liquidity hole and go, okay, fine, we take it off there. But because we have this target, I'm holding out for that target. Okay, well, that was a good down tick at 20. Not the greatest stack, but better. Okay. It was so close. They're gonna have to have a stack that's above 2,500, I think, for them to want to clear that big old order at 19.5. See, like the offers are gonna be a little bit skittish because they know that this is just too big. Somebody is gonna have to really come in and give them confidence by putting a good offer before they're really gonna take that. I was in a short position, got a little scared and exit, and now they're crashing. Yeah. As soon as I exit, this is definitely what's going to happen, is they're just going to... That won't just go to 19. They'll go to, like, the second deviation, right? So I'm noticing a pickup in level 2 activity, and the S&P 500 is collapsing here. So I do not like that. No, I'm going to get out. I'm going to get out at 20.5. There's not any news or anything. So let's, where was that one chart that I had? Duplicate in new tab. Let's change this one to ES. And why do I have a TikTok tab open? That's funny. We want indices. $14.11. Still 20.5, so maybe was a little too hasty getting out there. Okay, well, hold on a second. The SPOOs are like right at their target. And bouncing at the moment. So maybe I was too hasty. Yeah. Maybe I was too hasty getting out. No. You almost took a trade there. You almost took a trade. What do you want? No, we're not playing Minecraft. You gotta go to school, bud. You have to go eat. Did you eat breakfast? Gonna be so funny if before the top of the hour we are sitting at 19. But I don't know, man. What's going on with SPOOs? It seems like SPOOs are just getting absolutely clobbered. Wait, we should come back on a volume profile. How big of a deal is that on a volume profile? It is a big deal. It is a big deal. Granted, we got single prints all the way down to 67.37. That's something's up. Like, okay, there was some big transactions happened in the treasuries. We saw a pickup in level 2 activity, which has slowed down a little bit. And the S&P 500 sells off hard. Have you seen this? Oh my gosh. I'll have to go back and find the video. So that was hilarious. And that shark looked really good on camera. My autistic son just came in and shoved a shark puppet in my face. Trump tariffs on North Korea. Here, I don't think that's like a breaking story or anything, though. Okay, so let's come in here and do this again. Duplicate in new tab. NQ. NQ December options quotes 18.82. So the NQ went a little further than the ES on its projected volatility, but not beyond. It was just they got to the regular session instead of the. That's very interesting. Oh my gosh, are they gonna do it? No, not a big stack there. Still, it's one tick. I mean, we're talking about 3 ticks here, right? But hey, in a day like today, that's a lot. Crazy how that they're kind of turning at the same point. Yeah, it is. Well, you know, whenever this comes up, though, like the thing that frustrates me about it is that we were kind of onto using volatility in a manner like this. I think we first did that in 2020 wasn't it? Or was it before 2020? Like a long time ago. But using the at the money options quote rather than the volatility index itself, it's just, we were just using the wrong measure of volatility. So it frustrates me that it took me, well, not me, because I didn't find it. I'm frustrated that it took us like 5 years to realize that. Then when you come in and you put it in there, it's like very clearly doing what we originally kind of envisioned. Yeah. It was all you. 100% you. Well, and yeah. And the funny thing is it wasn't even that we were like, oh, well, maybe it's because it needs to be like the volume in the options that's happening right now. And so that's why this one would be better. No, it was just bar charts was the only free available place to get the data. And they happened to have a percentage number up there. So like the way that we happened upon it was a little bit random too. I think it would be an interesting thing. Yeah, it hit me when I saw E-Trade platform showing options implied move on one of my positions for, yeah. But that might be, their number might be even more different. Oh. Yeah. And I thought, I can do that with the options volatility on bonds. Yeah. Yeah. Well, so I'm interested now, like, if you use the VIX versus the at the money implied volatility, like, how much is the difference? It seems to me that when I was doing this in the past, that it was like a pretty good guide, but it wasn't enough for me to like explicitly take trades off of. I don't know what the volatility was yesterday, so we would have to go and get the past data, but we could start tracking it from here. But that seems like that's such a hard level that I can take trades off of it. And I wouldn't be able to just be blindly take technical trades off of it. Like anytime it touches it, take the reversal trade. But together with everything else that we know. When I added move index to your exploring at first, it wasn't too much of a difference on the bonds. A couple of ticks here or there. Oh. Well, yeah. The other thing we definitely have to keep in mind is that this is very much a range-bound market, right? Like, I don't know why the S&P 500 is falling apart, but if there's a real reason behind it, they could just absolutely crush this level. They're pushing it again. Let's come back over here really quick. Where was the gamma exposure levels? Because we're in positive gamma again, right? Yes. Doesn't get negative until about 67.30. So we got a ways to go there. And 67.50 is a positive gamma level. Okay. So theoretically speaking, this should be a really tough level to breach. They sure seem like they're trying, though, at the moment, don't they? I don't think it's a quality strategy, but if you're going to do it, the stop needs to be on the other side of that level, like no room for error. Oh, sorry, I missed your other comment. Taking level trades is fine if you keep one thing in mind: extremely tight risk. I don't think it's quality strategy, but if you're gonna do it, your stop needs to be on the other side of that level, like no room for error. Yeah. Well, and like no, it's totally fine because like it hasn't one of the things that we've been trying to do. I know we've talked about this before, but like one of the things that we've been trying to do is to find a trade that really has that skewed risk reward, which is to say it really works like 90% of the time, but it's not a profitable strategy long term because when it fails hard. And we're okay with a strategy like that because we think that we're informed enough to know when it's going to fail hard, right? So this could be, you know, like for treasuries, I feel like it's a little bit of help in treasuries. But in the E-mini, it's more helpful in the E-mini, I feel, just because it's so random over there anyways, you know? So like but especially for something like getting a VPS and running an automated strategy on spoos for a prop firm kind of video, past a prop firm. I think this could be a really good candidate. We would just, I would just want to like combine this with yeah, so the difficulty here is going to be I might have order flow data to historically backtest on, but I definitely don't have these volatility levels data to historically backtest on. Now they did breach 50 and now they're already to the 77.40. Sorry, 67.40. So that's not looking so hot at the moment. But anyways, so it would have to be like, we would just have to put it in blindly, right? Year long? The 2 year. Okay. Well, I am. Oh, okay. Interesting. Because there is a little bit of an impulse. So if you just did it, I think that makes a lot of sense. A lot of sense. Especially if the E-mini is going to keep cratering, right? You've been holding it the whole time? Really? Even through all of that iceberging and stuff? Huh. I don't know. Like, the thing is if the S&P 500 wasn't falling apart, I think I would totally still be in it. Even though I really don't think I have any reason to believe that it's actually going to touch it. But now I like your trade because if they're going to push to 73.30, then negative gamma gets involved and this could really like implode. I still am just not sure why it's falling apart. Maybe there's some news on the shutdown or something. Now, Financial Juice, U.S. House Speaker Johnson and House GOP leaders give remarks on day 22 of the shutdown. Watch live. Maybe they're saying something that out. Oh, he dog came in, but he has a diaper on, so it's okay. It's okay. Well, it is slowing down, so I don't know if we'll find, because the other interesting question will be in ES, if they continue, where will they stop, right? Hmm. Mark Mitchell, Rasmussen report says, imagine if there were 2.6 million fewer people in America and their jobs went to Americans, and those jobs provided around 350 billion in annual economic benefit. I bet Zoomers would be a whole lot less hopeless. I actually don't think that would be the case, because it is curious that the amount of unemployment right now is pretty close to like the amount of like illegal immigration that has been added during the Biden years. Okay, but that doesn't necessarily mean that those are the jobs that the people that are out of work are looking for, right? So probably a really, really good portion of those are tech workers. Okay, E-mini's stabilizing, right? Maybe the buy it 67.50 makes sense. I don't know, man. I'm really torn on it. But I can see the opportunity for a reversal, right? I don't know. If I took a reversal on ES, I'm not sure where I'd take it. I guess for 10 points. For 10 points would make sense, right? Fed's emergency liquidity facility unexpectedly soars, the most since COVID. Somebody is still experiencing stress, huh? Or wait, are they? I'm just seeing that on Twitter. Is that like a? Senate GOP mull filibuster reform to end shutdown. Yeah, I mean, I wonder. It seems to me that after the way that it went last time for them, that Republicans would be very unlikely to do a government shutdown again, right? I kind of thought that, given the circumstances, that Democrats would also be similarly reluctant to do a shutdown again. After this one, is definitely going to be, because now it's been the shoes on the other foot and it still goes that way. I really think it's really like, okay, actually, being the minority party during a shutdown is just a terrible, terrible idea. So do you really actually need filibuster reform to end the shutdown? Well, let's read the story. I mean, maybe to end the shutdown, but then maybe it's a moot point after that, you know? So then the question is, what are you changing to the filibuster rules that would have long-term impacts outside of government shutdowns? If it's like, oh, this is only can happen for the shutdown, but I don't think that would be the case. Okay, let's see here. Nobody talked about this 2 weeks ago. Now that we are seeing the Democrats are just not going to agree to anything, that's probably a viable option, said Tommy Tuberville. I don't know the answer to this. I don't think anybody does, because they're not going to give and we're not going to give. So it's just going to be a stalemate, and the loser is going to be the American people. Tuberville notably defended keeping the filibuster after Republicans won control of the Senate in last year's election, while other GOP senators are predicting that President Trump will start pressuring Senate Majority Leader John Thune to change the Senate rules if the shutdown continues into next month, a move Thune has explicitly said he opposes. I think the pressure from the White House will be pretty enormous, one GOP senator told the outlet. We're reaching a point here where the SNAP benefits start going down, the military pretty soon, the president isn't going to have enough money to pay them, and we're going to reach a point where people are literally not able to buy food, the senator continued, referring to the Supplemental Nutrition Assistance Program winding down, along with the military eventually going without pay. We're going to reach a point where people are literally not able to buy food, the senator continued, adding, there's going to come a breaking point. Filibuster reform needs all kinds of different things. It could be a talking filibuster. The longer this goes on and the more intransigent the Democrats are, I think they're inviting a conversation about, are there steps we can take here if this goes past November 1st? I think the mood is really going to turn in the country in a big way, they continued. According to Ron Johnson, Republicans want to preserve the 60-vote threshold for passing legislation, but admitted they were looking into the possibility of a carve-out to end the shutdown. I think for the Senate, having the 60-vote threshold for passing legislation is good, but it should depend on the type of legislation. Like, if you get rid of the filibuster and then the Senate can just pass a law to like increase the number of Supreme Court justices, then that's just going to be all chaos, right? I would support, I really think that the number of Supreme Court justices that we have is good. I would support legislation that would be like a constitutional amendment to cap the number of judges or something like that. But that's not going to happen. I don't know, man. There was a little bit of an impulse up, but it didn't last very long. Spoos definitely look better here, though. Oh, okay. Well, it sounds like I got to take the kid, so I'm just going to shut things down. I'll see you guys tomorrow. Stay